Welcome, everyone, and thanks for joining us. I'm Vinny from WCG Investments, and I am here with my partners, Tim and Matthias. And we're really excited because we have a new deal under contract in Albany, Georgia. So this session is going to be about giving you an inside view of what we're seeing so far, right? We're going to talk about the market, park details, the financial profile, and the potential upside for this deal. So high level, it is a 131 lot, 3-park portfolio in Albany, Georgia. And the negotiated purchase price is $2.76 million, which is $21,000 per lot, which is a really good price for this mobile home park. So with that said, Tim, how did we come across this good deal?
Yeah, thanks, Vinny. I love the mobile home park space because you make connections. Everyone who also owns mobile home parks. You go to SECO, you go to MHP conferences like what were MHI in Orlando, IMN in Tennessee. Like you're talking with people who all have the same experience, and everyone's there to help each other. And so the owners of this one, I was connected with him because we also own in Albany, and I had some questions about needing someone to help with infill and setup for new mobile homes. And so a friend hooked me up with this guy, and we had a great talk, and he's like, yeah. Here's what I know, here's how I can help. And then from there, we ended that conversation with, if you're ever looking to sell, let us know. Cause we like to own a lot in the same area. So there's all this really cool economies of scale. So yeah, I got an email maybe 6 months or so after that first conversation. He said, we're looking to sell. Are you interested? And I said, absolutely. And we went back and forth on purchase price and stuff like that to make sure everyone's getting what they need. After we analyzed everything, I said, we can give you this much because we have to get our investors the minimum threshold of returns. And he came back and he said, can you come up a little bit more because we have to do the same. So I said, yes, absolutely. While of course, always being cognizant of those returns, but like the little bit more that we're giving is completely doable to ensure all investors are walking away with their projected returns. And yeah, I mean, that's the beauty of this industry is that I'm not fighting someone to overprice. I'm like, okay, how could we solve this together? And yeah, it feels really good, man. I'm excited.
So when you got the deal, what was the one thing that caught your attention?
That is in Albany, really. That is in a market that we already own in.
Nice.
There's a ton of value add, but like really, I love that it just builds up our portfolio in the same city.
Yes, and by doing so, you minimize risk, right? Because we're very familiar with that market. Speaking of Albany, Matthias, what do you think about Albany? Why is it a good market for us?
Yeah, it's a pretty good size. It's over in that county, Dorter County. We have over 80,000 people living there. Although the population is declining, but very slightly. We're very conscious of that, obviously. But we know the market really well. I think that market knowledge goes a long way. We own 2 parks there already. And we basically doing the same strategy on that park we already own, or the 2 parks we already own on this portfolio. So it's really just a copy paste of what we're already doing. And we have the same team on site, right? On a team established we can use for this portfolio. So it's a strong military presence there too in Albany, which we like. The Marine Corps are very well established there, and the healthcare system. The health system is the biggest employer there, which is pretty good. And if you have to infill lots, which is part of our strategy here, it's good to have a market that's a good size, and with 80,000 people, that's a really good size that really passed the first sniff test, so to speak. You don't want to infill on a park, that's is in a town that has only like 2,000 people living there. We're not going to be the biggest landlord in the market, which is always very good. And yeah, there's a lot of opportunity there in Albany, Georgia, obviously. So it's also close to other big cities. Obviously, it's pretty close to Tallahassee as well. So there's a lot of people moving around in that same area, as people leaving Florida for hurricane risk and reasons and stuff, and then moving more north into the Georgia area, which we can absorb some of that tenant base as well. So yeah, I feel like it's a really good market to dip into. It's a really strong rental market, and we are underwriting in that direction as well, for having homes infill and also keep them as a rental, especially when they're new. They have a lower expense ratio, and then keeping them as rentals. We're still going to have a spread between like the debt service on the homes and then renting them out as rentals. So Albany is a perfect market to hold them as rentals long term. So every market has its own strategy that works really well. And since we already operate there, we know exactly what works, what doesn't. So that's why we like it so much.
Yeah, awesome. So let me give a breakdown of the park real quick. So as I mentioned, it's a 3-park portfolio, 69 tenant-owned homes. We love that, right? Because for the most part, our business model is to take over a park that's usually parked on homes, and we transition them to tenant-owned homes so we can minimize the expenses. So this park, right off the bat, we have 69 homes that are tenant-owned homes, which is really, really good. 11 rent-to-own leases. And okay, in terms of vacancy, it has 4 vacant parked-on homes and 47 vacant lots. So there's room for infill. And we'll touch a little bit on the business plan here shortly. 2 of the parks have city water and sewer, which is pretty awesome and is directly billed to the tenants. 1 park has private well and septics. And just a reminder, this is a pre-walkthrough webinar. So this is what we're seeing so far. Next step is to travel to the park and check out the infrastructure, making sure everything lines up with what we're seeing with the underwriting and the information we're given. City electric for all parks and directly billed to the tenants. So high level, it's looking really good. Let's touch on financials. Matthias, what is the current income profile, and where do you see opportunities for improvement?
Yeah, we have it currently there. The income is about $330,000 a year. They have an average lot rent of $290. The market is $450, $475, and we easily achieving that with our current parks we already own there. So that's huge. That's the biggest opportunity, really. Those parks are always super successful because it's a low-hanging fruit. You just go in and increase rents. Of course, we not go from $290 to $450 right away. You're gonna crush that tenant base. But as the audience knows, like watching our videos in the past, like when you have a lot of tenant-owned homes, the tenants are very sticky. We don't want to take advantage of that because it takes a lot of money to move those homes. That's why we stepping up to market rents. So, but overall, they're getting so far a really good deal in that park by paying only $290 lot rents. And we had our property manager for our existing portfolio going through all these parks already and told us like those parks are really nice, so they should be easily in the 450, 475 range from a lot rent perspective. So from a competitiveness perspective, I think we're in a really good shape here. So I feel like that's the biggest opportunity right out of the gate, and that's the easiest to do, is just to really just increase lot rents right away out of the gate. So I think that's the biggest one, and that will supercharge the income right away without even changing anything on the expense side, which there's other opportunities there too we go into later, but just increasing the income is the low-hanging fruit here.
Awesome. Tim, can you touch on the lending? Our lenders, do they have appetite for this deal? What do we know so far?
So to be honest, not a whole ton. We're just right now sending it out to our loan brokers. As always, shout out to Princeton Capital. Thank you so much for this mug, the Stanley Cup.
Rock.
Yeah. But so yeah, we're having Judah shop this one, and find like the best lending on it. And because it's all tenant-owned homes. Usually, for stuff like this, if it was a majority of park-owned homes or like rent-to-owns or whatever, we'd go with Vanderbilt because they love that. They lend super, super well on it. We've done a ton of business with them. We love working with them. For this one, since it's tenant-owned home, I won't be surprised if it's 5-star. And, the same lender who gave us lending on the Oklahoma City Sherwood Forest Park. And yeah, working with them is great too. I would love the opportunity to continue working with them. And yeah, I mean, their rates are very competitive. It's usually a 30-year, or as best as I know, it's a 30-year AM with probably, I'd imagine, a year of IO if we're asking for it. And yeah, it's just, it's kind of like I was saying earlier with the, you work with people. And so it's like in mobile home parks, you know everyone. And it's like there's all this opportunity for us to continue doing business with people we like doing business with. So yeah, I'd love to, partner up with the guys there at 5-star again if they have appetite for this deal, or whoever Judah finds. He's a pro. So yeah, I look forward to closing this one with Princeton again.
Yeah, definitely. And like I said, right, this is preliminary. We just got the park on the contract. We're looking at things. So it's really early on. We just wanted to take a minute to share with you guys what we're seeing. So we'll keep you in the loop as we progress through the process. Speaking of where we are, Matthias, in terms of returns for investors, numbers as they are right now in the underwriting, how does this deal fit into our overall return targets?
It fits really well because we always use the same North Star. We're always looking for 2x equity multiple in 5 years and 18% plus IRR. That one fits the bill really well. We're way north of that. Nothing is finalized yet because we're really in the early stages. We just got on a contract. We're gonna do another drive-through here with our partners and look if we need any extra paving or any other major infrastructure upgrades. But so far, it looks really good when our property manager drove through these parks. So right now, I mean, from a return perspective, there's a lot of things that have to go wrong that we are going below that threshold, below our North Star. So from an overall return perspective, I think this deal is really, really solid. And it goes back to the below market rents, really. That's a low-hanging fruit, right? So if you just take it up to market rents and do nothing else, you're already creating tremendous value. That's where the major value creation is made here. Of course, we're going to infill too, which also drives up the income. And this will also create better returns on top of it. But we're stress testing the deals on that front as well, where we do certain models where we say, okay, what happens if we don't absorb all the new homes we're going to put in as fast as before? We're going to have like a stress test model, like a worst case scenario. Even that hits the 2x equity multiple mark as well if you're reducing that and be more conservative. So that's what I like about it a lot, that even we stress tested really heavily, we still hitting that North Star, which is really, really good. And we like that we know that market too. So I feel with that deal, we're really safe in a sense, because we know what we're up against. We know exactly the people that live in there. We know how the county takes. We know how the city takes. We have a property manager there that kills it. He's a really good guy. He's born and raised there. So, I mean, I really love what I'm seeing. So even with stress testing, it looks good. I mean, I'm looking forward to getting this thing started.
That's awesome. And that gives investors confidence, right? So our investors know, right? If you work with WCG Investments, you understand that we take pride in being transparent and open. And something that's really important is explaining to a new investor or returning investor the risks, because every investment has a risk. Every park may have risks. But communicating our mitigation strategy for those risks is really important, right? So with that said, Matthias, what are the key risks with this deal, and how are we planning to mitigate them to protect investor capital?
That's a very good question. With the rent increases, you always have that risk that people say, this is too much for me, I go somewhere else, obviously. With the amount of tenant-owned homes we have, it's harder for people to leave. And you might have people that say, okay, I'm going to leave because you guys did a $75 increase, I go somewhere else. But they're quickly going to realize that, the park down the road is going to be at $450 lot rents. And if we go from $290 to like $365, we're still going to be the best deal in town in year one. So we're going to have still some very sticky tenants, so to speak. So that's why we stair step. You don't want to shock the system, but it can create some turnover where people say, okay, I'm going to move out for some reason, right? But I see that risk is really low because we are so low below market that we're not going to have that much headwind. The infill is always, I feel, in mobile home parks, probably the hardest thing to do, really. Infill is not easy. We're doing it actively right now, and it's really a grind. So that's why we're stress testing it. Even if we just fall short of like half of the units we want to infill, and it still meets that North Star of doubling the investors' money and hitting the returns, then we know it's a safe deal. If we say we're gonna, our plan is to infill 3 in year 1 and 4 each subsequent year for the next following 6 years, and just say we do half of that and we still get the same returns, that's a really safe deal. That's how we stress test the deal on the underwriting on that end. And also another risk is it's a market that has slight declines in population, but we're looking at that from a perspective of the city is still very big, and the county is still very big, and the declines are small. There's single digit area, like 3% decline. We're not talking about like 20, 30%, right? In some other markets. And it's still a very landlord friendly market. It's Georgia, right? We are far away from Georgia. Tim and I can hop on the car and be there in a few hours. It's really close. Of course, partners live there on site. We know the market really well, and it's very landlord friendly. So we know how to behave in that market too. So we have all the contractors in place for making sure the infill goes the right way, because again, infill can get complicated and a little bit sticky. It takes a lot of effort and really some sweat equity, so to speak. So, but with our market knowledge and with our team on site, I have a strong feeling that that all the risks that we do have that we're facing, which are real risks, that we are mitigating really well what we have available at day 1 or day 0.
Yeah, good stuff. Tim, how resilient is this investment in a downturn?
Yeah, I mean, it's like most mobile home parks, right? So everyone needs a place to live. There's, right now there's a whole ton of tenant-owned homes. So people, even when we go up on the rent slowly to get to market, it's still going to be the most affordable place to live in town. You're not going to get an apartment for cheaper. You're not going to rent a home for cheaper. You're not going to buy a home for cheaper. So it's we're providing the affordable housing needed for people to live in. So as long as we treat people with respect and we treat them well, and provide value, which we do, we'll have people who stay and who pay. And yeah, man, I'm very bullish on this one. There's so many cool things that are adding up that I'm like, oh, like also this and also this and also this. Yeah, I think it's gonna be a good one.
Yeah, I agree. I'm really excited about this one. So Tim, so we have a lot of parks in the area, right in the Southeast. How does this park fit into our existing portfolio?
Because we already own 2 parks in the area, and so it's like Matthias was saying, we're building our portfolio there. We've got the right people in place to help with it. And it's just, yeah, it's all the economies of scale. So, it's not like, trying to get something done when all you own is like a 35 unit in one area. It's like very, very difficult. But all of a sudden you own, gosh, this will put us at what, 175-ish, right? And so, yeah, just great economies of scale and great opportunities to which really mitigates risks for our investors, right? You, the investor. And it's really cool where we can bring people in and make it like continued a safe like investment thesis,
Absolutely. Matthias, how will investors benefit from this deal, and what's the projected timeline? What's next?
Yeah, they will benefit from a well stress tested deal, right? Because we stress tested not only this deal on paper already, we stress testing an existing portfolio already with 2 parks. So I think that will benefit from that market knowledge. A team that's already on site. We're not venturing into anything new. They're not uncharted waters for us. It's a market we well know, operating there for many years. So I think this is a huge advantage. Timeline wise, I believe when is closing slated, like around November, Tim? What was it, around November, I believe, early November.
Yeah.
So right now we're really early. We just signed the contract. So this is a really early insight for our investors here. So really early, but time is flying. We almost have Christmas. Time recording today is August, but they're already putting Halloween stuff in the stores. So time is flying fast. I feel really confident with this deal because everything that we have been discussing here in this webinar, like everything's adding up really nicely. There's a nice compounding effect here of goodness that makes it a really safe deal. Of course, on the underwriting is one thing. Like once we actually walk the parks and see what else is needed, we'll see what the actual numbers look like, and we're gonna have like a follow-up webinar on our findings, like a post DD walkthrough webinar, and then of course that will create version 2 of the underwriting. We're going to stress test that one as well. And then if everything passes, of course, then we're going to open the gates for the investors to storm in. So yeah, I love this deal. I think it's going to have some major upsides for everybody.
Yeah, definitely. Tim, any final thoughts on why now is the right time to keep an eye on this deal and, start following?
Yeah, absolutely. So now is the perfect time of year. Like it's not quite the end of year, but it's coming up on it. So anyone who's like, man, I have a tax issue. I need to reduce my taxable income. Now is the time to get into these deals. The wrong time is to wait till November or December, because then you're looking for like there's way less deals. And I've seen a lot of people put money into bad deals or not optimal deals because they're trying to mitigate some of that tax burden. They're trying to reduce their taxable income, save some money from Uncle Sam. And the thing is, if they had only been a little bit more cognizant of the timeline, because it takes time. I mean, whether you're going to put money into this deal or someone else's deal, like you still got to do some work and vet people and vet deals and stuff like that. And it's the absolute wrong way to go about it to wait till the very end to place your capital. So yeah, I mean, by all means, hit us up. Let's talk about this deal. Let's see how we can save you a ton of money while also keeping you, preserving your wealth. So yeah, I know it sounds like a act now sort of sales technique, but bro, like, trust me, I've been around enough. I've seen a ton of people do dumb stuff because they don't act quick enough. So I'd hate to see. I hate to see it, and I'm sure I'll see it again at the end of the year. I get texts like, "What do you got?" And it's like, bro, like we just closed our last deal in November. We don't have anything that's going to be closing any longer. And then it's those same people who are running and putting good money into bad deals, and that I hate that.
Yeah, it's really hard to see, right? So, hey, it's early, and like I said earlier, we just went on the contract. We just wanted to come on and create a quick webinar to walk you through what we're seeing now. The plan is to keep sharing content so you can follow the progress, and if you're interested, and at some point through the progress you're interested, reach out. Let's start having a conversation. There's no commitment with a conversation. Share what you're interested in, what your goals are, and how we can have a potential fit for your goals. So right now is the time to have conversations and to see how we can help. As you can see, while this is still preliminary, the fundamentals are strong. We like the Albany market. We already own parks there. The parks offer both stability and room for upside, and the financials align with the return we target and for our investors. So everything is lining up, and the boxes are being checked as we're going through the DD process. This is an exciting opportunity that reflects our disciplined approach to acquisitions, and we'll continue to share updates as we move through the due diligence. Something worth noting is that once we go live with the offer, this will be a 506c investment for accredited investors only. So keep that in mind. If you'd like to learn more or stay in the loop as this deal progresses, see the link below. And we'll see if you want to be added to our investors list. We'll add a link below so you can sign up. And that's another way to stay in the loop. And if you know someone who would be interested in opportunities like this one, feel free to share this video with them, so they can learn as well, and they can follow along and potentially, grow with us. So again, thank you guys for joining. I know you guys are busy, and so you're taking some time out of your day to learn about what we're doing. So we really appreciate you taking the time. So with that said, thank you, and have a great day.